Hello everyone, this is Vidya. I have come up with a topic balance sheet. Let me start with the introduction to the topic. A balance sheet will summarizes the financial condition of a business at a point of time and is described as the financial status of the company. It shows assets, liabilities, and the equity at a certain time, usually at the end of the fiscal quarter or a year. It presents assets on the left hand side of the left hand side and the equity and equity liabilities on the right hand side. Some use assets at the top and the equity and liabilities at the bottom of the page, but whatever it is, the concept is same. Some of the features of the balance sheet are is only a statement, it's not an account. It has no debit side or a credit side. The headings of two sides is assets and liabilities. It is prepared at a particular point of time, not for a particular period. It is a summary of the balances of those the ledger accounts which have not been closed, transferred to the trading and the profit and loss account. It shows the nature and the value of assets and the nature of amount of liabilities at a given date. What are the needs for the balance sheet? Some of them are to ascertain the nature and the value of assets of a business, to find out the financial solvency of an enterprise, to ascertain the nature and the amount of liabilities of a business. And some of the basic principles of the balance sheet are most businesses borrow money to help them to operate. A balance sheet has a special section called liabilities. This shows how much money has been borrowed by the company and where it came from. The term balance means that the money invested or borrowed must be accounted for in another section called assets. The general format of a balance sheet is assets on the left hand side, the liabilities on the right hand side. Under assets, current assets, non-current assets will be entered, and total assets will be calculated from adding current assets and non-current assets. In the right hand side, the liabilities will come. Under liabilities, current liabilities, non-current liabilities, and it will be calculated as total liabilities. Under owner's equity, total liabilities and owner's equity will be there, and we can attain total liabilities and owner equity by adding both of them. What are the items of the balance sheet? Items should be shown on the liabilities side or equity and the liabilities. Items to be shown on the assets are fixed assets, investments, long-term loans and advances in current assets. So, what are assets? Assets are the fixed assets, items which owned by the company last a long time. Example, buildings, vehicles, computers, etc. could be sold to increase the capital, that is, money owned by the business. What are assets? Current assets. Under current assets, items used and replaced regularly, for example, raw materials, stock, etc., are included. Customers who owe money for goods they have bought, money in the current bank account. What are liabilities? So, current liabilities are the money the business owes to suppliers for goods purchased or credit and short term loans. Liabilities also includes capitals and reserves. Share capital, reserves, profit and loss account. In the share capital, the money which shareholders have invested in the business will be included. And the reserves, profits from the previous years which has been kept to finance the future developments. And in the profit and loss account, money kept back from the current year's profits will be entered. So, what are assets? The assets are separated into two categories, current assets and the non current assets. Some of the current assets are cash and cash equivalents, accounts receivables, all stock and debt investments with a liquid market or considerable market securities. Inventories refers to the things that a company currently has in the stock and is available to sell at the current market price at a lower price. Prepaid expenses. Some of the examples of long term assets are any long term investments, those that will not be liquidated in the next year. Fixed assets include land, machinery, building, equipment, and the structures. Intangible assets. Intangible assets are the assets that have worth but are not physical. Some of the examples of intangible assets are intellectual property is an intangible asset. This type of intangible asset is only recorded on a balance sheet if the company buys it. Liabilities. What are liabilities? The balance sheet of a corporation differentiates between current and long term liabilities. The business balance sheet does not include all obligations. Some of the current liabilities are accounts payable, some owe to vendors who provided goods or services. Deferred revenues. Deferred revenues are the sums that a client has paid in advance and that the company will receive within a year after the balance sheet date. Payroll due to employees and must be submitted for payroll taxes is known as accrued compensation. Amounts owed for the items not recorded in the accounts payable or the accrued compensation are known as other accrued expenditures. Income taxes that have been accrued as well as some income taxes that have been deferred bank loans having a 1 year maturity date are known as the short term loans. The current share of a long term debt consists of mortgage or equipment loan principal payments due within a year. Dividends paid to shareholders or investors. Some of the examples of long term liabilities are long term debt consists of interest and a principal on bonds that a company may have issued. Payments for employees' retirement funds are referred to as pension fund liabilities. Deferred tax liabilities refers to the tax payments that are not due until the next year or later. What is equity of shareholders? The following sections often make up the equity section. Stock in capital, net earnings used to pay down debt or reinvest in a business are referred to as retained earnings. The remainder is then given to shareholders as dividend payments. Additional paid in capital consists of common stock or preferred stock that has been purchased by the shareholders. Instead of a market price, the value is based on the par value. By subtracting the total number of obligations from the total number of assets, the shareholders' equity section may be computed. Ratios of finance. To acquire a better understanding of the balance sheet, a financial ratio can be used. The following are some of the most typical ratios used to assess a company's financial health: debt to equity ratio, working capital, quick ratio. As a result, the balance sheet gives an indication of the company's financial status, whether it is profitable and what steps, if any, need to be done to improve the company's performance. So that's all about the balance sheet. The other half of my part will be explained by my team member. Thank